Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking metals and gold prices, seeing a much lower week-over-week trade, but not really showing any bearish trends yet. We're about midpoint of the one-month range with gold trading around 1330. Take a step back though, we're still up about $80 from just ahead of DCEF-OMC. So we have made a considerable move since the end of 2017, and we're kind of holding at these upper levels. And well, we got a lot going on next week that could really vault gold higher or send us back down below 1300. We have the new Fed Chair, Jerome Powell, speaking to Congress on Tuesday and Thursday next week. That could be enough to propel the gold one way or the other. Or if the market just takes a step back and says, hey, he's really not changing anything that we saw from former Chair Yellen, gold may just spin its tires and hold within that range. So right now, kind of a lot on the table and a lot pending. We're not there yet. And if you look at what the dollar's doing, the dollar really saw a strong week. It was bid. There was strength in the dollar, something we haven't seen in a long time. But we've seen these moments in the dollar a few times over the last several months where we do start to get a little bullish. We do start to see things a little more positively. And then, lo and behold, things go right back to that old trend of weaker dollar, selling dollar, whether it's fiscal policy in Washington, whether it's our own Federal Reserve, or whether it's strength in other currencies like Europe and Japan. I think that right now the dollar is due for a bid, a bigger bid than we've seen. But of course, all that can change on the dime. And lastly, let's look at positioning. The spec longs that have been really supporting this market got long ahead of this week's sell-off, only slightly longer. I mean, recall we saw over the last several weeks, we saw spec longs getting out as the market was reversing. We did see them get back in, but not with both feet. It's almost like they were dipping their toe back into the market, getting and maybe adding to some of those existing longs, but certainly not putting all their chips back on the table. I think one of the reasons why we are kind of hovering at that midpoint, they're waiting to see what perhaps Chair Powell has to say about the expectations of gradually rising interest rates. What will the Fed do if we have a growth issue with rising inflation? What will the Fed do if the curve doesn't start to re-steepen again as aggressively as they want? And I think those are all things that may start to get answered next week. And gold will be reflective not only from a defensive measure, but also from a policy measure. You know, obviously, if yields are going to go higher, that makes gold less attractive. And if we continue to see stocks rise, that will also make gold less attractive. But gold can be a defense against the unknown, against the what if. And that's where it's really been seen its most demand, I think, over the last year or so, given the rate that equities have risen, given the fact that yields have been trending higher. Gold still seems to find favor in an environment where it typically wouldn't. So right now I'm expecting, we got to wait and see what happens when Chairman Powell speaks next week. Gold right now, like I said, right in the middle of that 1 month range, but over the last, call it 3 months, we have seen gold seen some pretty significant gains, and right now we are not turning bearish yet. We are still optimistically neutral, we'll call it, in gold, with the idea that we are either going to make a break towards 1365 or we're going to see a breakdown well below 1300. Those are some big moves that we're looking at, but obviously when the chair speaks, the markets tend to make those big moves. So right now, holding on to our gold, at least till we get through Chairman Powell. This is Todd Colvin coming to you from the floor of the CME Group.